The price of goods is flying higher. You've got lumber and copper, oil, housing, everything is costing more. Should we be preparing for inflation? The answer is yes. I've got 5 exciting and under the radar stock choices to protect my money in an inflationary environment, and an ETF that can weather rising costs by snapping its fingers. Do you want to know what they are? Well, stay tuned, and if you'd like to support this channel, hit that like and that subscribe button. Don't you love a good Warren Buffett quote? This one is fantastic. Inflation is a giant corporate tapeworm that consumes dollars regardless of the host. Is this a sci-fi movie or investment insight? The tapeworm of inflation simply cleans the plate. How about a non-sci-fi understanding of inflation? In a nutshell, it's when your money buys less of the same item than it used to. If you used to pay $1 for a Coke, now you have to pay $1.50. That's inflation. If housing prices go up, that's inflation. You, as an investor, need to understand this concept and how to protect yourself. I see inflation on the horizon, so I scoured the indexes and came up with 5 solid stocks to protect myself against the inflation tapeworm. And I'm glad to share them with you today and get your feedback in the comments. I've even got a bonus set it and forget it ETF. So let's jump into it. The first stock I like to hedge against inflation is Albertsons. Okay, it's a boring grocery store play, but those are actually usually the best inflationary hedges. They're a supermarket chain with 2,200 locations in 34 states. I think this company is ready to not only tackle inflation, but beat it. Their income statement backs this up. Since 2018, as cost of goods has risen, their revenue has risen with it. In fact, their gross profit is increasing, which means they're taking the rising cost of goods sold and increasing prices even further for consumers. Good as an inflationary hedge, it's bad as a consumer. As inflation nibbles away at consumers' purchasing power, they will still be buying bread and meat and vegetables. Albertsons isn't a charity. They're gonna pass that rising cost of these staples on to the consumer. I can say with confidence that Albertsons will excel in an inflationary environment. The next stock I like in this environment is Comcast. I can hear you guys already saying it. Cord cutting is killing their business model. Wait, it's killing one part of them. They lost 1.4 million cable TV subscribers last year. Ouch. Not a surprise to anybody though. But I'm with Comcast for their broadband access and the streaming service Peacock, both of which have growing customer bases. Consumers have been paying Comcast $70 a month for 20 years for their internet access, and that will continue. You might be doing the same thing. That stickiness is great for a business. I also really wanted streaming exposure for this inflationary hedge because I think people spent the last year thinking about how much they like streaming content from home. When pennies get pinched, I think families will forgo the $8 movie theater popcorn and keep the $5 Peacock subscription instead. Buy the farm. The classic inflation hedge is Farmland, and Farmland Partners, ticker FPI, is our play. You've probably seen my video on investing in farmland REITs. If not, you definitely want to check it out. But economists call farmland gold with yield. How does it protect against inflation? Farmland investors share in the profits of the farm, aka benefit from the rise in commodity prices that comes with inflation. Own farms stay ahead of inflation. If you do that, then you are the originator of the products whose cost is rising. FPI specifically is well positioned with 150,000 acres of diverse farmland throughout the US. It's probably a bit obscure to the average investor, but it's a solid add to any portfolio. How about a stock to hedge against inflation that's a little less obscure? Ever heard of Google? Of course you have. I absolutely love this stock as an investment. Google/Alphabet has the reliable revenue to keep the tapeworm of inflation at bay. Not to mention 18 billion, that's with a B, profit in Q1 alone. It is a cash-generating machine, and it's positioned in all the areas that consumers are going to keep spending regardless of inflation. Watching YouTube, browsing the web, downloading apps on the App Store, which, by the way, Google gets a cut of the revenue inside all of those apps. There might not be a stronger stock out there to take on inflation than Alphabet. Don't let the 30% rise year to date on the share price scare you off. Here, there's plenty more room for this thing to run in the years ahead, inflation or not. Now, before I give you stock number 5 to hedge against inflation, I want to give you my ETF pick because it's short and sweet. If I'm picking just one ETF for inflation, I'm going with something pharma. Drug prices aren't regulated by the feds. Big pharmaceuticals like Merck and Pfizer can raise prices to match any inflation damage their balance sheet takes. Basically, I want the pharma pricing power and the unwavering demand that comes with their products. There are a few pharma ETFs to choose from. I'll show you the list here. You know I tend toward iShares products because they're usually the leader in AUM and have low expense ratios. Here, it's kind of wide open. No one pharma ETF in this overview is the runaway leader, an obvious choice. And the iShares ETF weights 22% to Johnson & Johnson. That's a lot of eggs in one basket. So instead, I'll go with the equal-weighted XPH from State Street. 49 holdings in the top 10 comprise only 44% of the ETF. Nice, broad play of the sector. Set it and forget it. And for my final hedge against inflation, I want to introduce to you Hydropharm, ticker HYFM. For all intents and purposes, Hydropharm is a pure play cannabis pick and shovel investment. Maybe you've seen my video praising Scott's Miracle-Gro as an investment, particularly for their edge in cannabis cultivation supplies. Hydropharm is very similar, but doesn't come with the home gardening baggage of Scott's, which I predict will suffer during inflation. Now, people smarter than me might want you to see cannabis as a discretionary good and that sales of cannabis would go down if consumers lose their buying power from inflation. I'm gonna go out on a limb and tell you that most regular cannabis users, people consuming daily or semi-daily, have already budgeted cannabis into their life as a staple, not discretionary. And cannabis won't be what they cut back on. We're talking about tens of millions of people who fit in that basket. Hydropharm is the one place in the cannabis production chain in control of its own books, its own profit. They'll pass on the rising cost of goods to the cannabis growers who pass it on to the retail dispensaries. Dispensaries and growers might see a shrinking of profits as their costs rise, but Hydropharm won't. And again, psychology of the market. These cannabis users won't be cutting back because of inflation. I'm betting on it. So my first question to you is, do you see inflation on the horizon? If so, what steps are you taking to stave off that tapeworm? Let me know in the comments down below. Thank you for joining, and I will see you on the next one.